Hi amigos, welcome back to the Evolving Trader. And in today's topic, we will discuss what is technical analysis and what is fundamental analysis, and how both of them act and react to the markets and how they help us. And in this video, we will also discuss importance of both and which one is more important or which is best. And also, I'll give you a live market example and investment opportunity on basis of it. So please stay tuned till the end to get that. So first we will discuss what is technical analysis. So basically technical analysis is just a belief that the past trading activities and price actions will be repeated ahead also, and it is an indication to predict future prices. Basically we believe in historic data as a technical analyst, and you all know that we just stay on historic data and they work mind-blowingly good, and on the basis of that price patterns are formed, chart patterns are formed, and many volume and momentum indicators, oscillators, moving averages, support and resistance. What else? You all know that basically. So these are just technical analysis indicators. And what is now fundamental analysis? So fundamental analysis is basically just determining the stock's real value or fair market value, or what is the current market price, the stock really deserves it or not. So basically fundamental analysts search for the real value, and the parameters they watch in general are like balance sheets, income statements, cash flow, intrinsic value, and many others. These are just basic and introductory ones. So like what is the best? So if we go and see, technical analysis gives the best price by seeing charts, and fundamental analysis gives the best stock, like the stock has the potential or not, and we will discuss this in charts. So just wait for it. And when both of them are used in combination, they give the best possible results, and it's my personal experience through which I'm saying. So now let's get to the charts and let's see what charts have to say. So now we will see two companies. One is a penny stock and one is a well developed stock, which was a penny stock at a time. So the first we'll discuss is Titan. So if we go back to 2000s, Titan was trading at 3 rupee, 6 rupee, 1 rupee, and even some days below 1.7 rupee, 1.6 rupee, and today it's worth 2000 in 2022. Now if you would be in 2000s, and how would you think that this stock is really worth it or not? If you see, according to price action and technical analysis, it just gave a great cup breakout and continued the breakouts, and all those swings were respected and everything, and it went to 2474, which is today's, and almost close to the all-time high. So how you would have interpreted its value? So of course technical analysis will give you the best price, but the company is really worth it or not, the price it's having. So there are many pump and dump strategies going in market, which are manipulative move and which traps a lot of retail investors, and that's exactly what I'm going to discuss in the next company. So if we go and check Titan, historically till now it has given a return of 33,386%, which is just great. And if we go and see its financials, the revenues were always increasing, they never decrease. Like from 2013 the data is available here. So from 10,000 the revenue skyrocketed to 29,000 till 2022, and profits EBITDA specifically from 1113 to 3521, which is great. They paid good dividends as well. And if you go out and see their balance sheet, cash flow, everything was great. In their peers also they were performing great, and there is a great story behind Titan, and a great person, Ratan Tata, and of course the greatest investor, Mr. Rakesh Jhunjhunwala, who sadly passed away. And many of they have holdings on institutional levels. So it was always great. And if you see the same stock giving some good technical breakouts but is not fundamentally worth it. So we have an example of Alok Industries. So you can see the stock opened at, we are on monthly chart, so the stock opened at 17.7 rupees. It is today trading at 19.5 rupees, and some people pumped it till 58.5 rupees, which was not at all worth it. So it came back to its real value. You can see the manipulative move of close to 1000%. Oh my goodness. From the bottom, that to from 3 rupees straight to 50 rupees, 1000% move. But it came back to the originality pretty quick. So here it was a great technical breakout. If you go on smaller time frames, you would have definitely found something here and you would have easily entered, but you are nowhere today. So if you go to the fundamentals here, the reality check is historically it never provided returns. If you see its PE, it's minus 46, means it's just not worth it. And if you see its financial trend, the company hardly made profit sometimes. So it wasn't worth that price and it came back to real value. If you see here, the revenues were like not that great. It was 21,000 in 2013 and that it continued decreasing. The profits were in negatives, were decreasing, nothing was stable, no dividends, nothing. So it gives a hint of a company. And in its peer, you see balance sheet, cash flow, you can see it in details. Nothing looks that great and attractive, at least as of now. So at least as of now, and peers also, the thing is different. And the main catch here is holdings. If you see here, zero mutual fund holding, 1.9 at foreign institution, that too it's something different. As you can see, 22.28% retail investors. And if you see it in Titan, the holding will be 19% retail investors and many others. But here 22%. And that's the problem with our retail investors. They just freak out in shit companies and do their shit out there and say that stock market is a gamble. Then what we can do if you invest in shit? So the price itself says it, and the fundamentals gives the value that the company is worth it or not. So if we see a current opportunity which is looking great technically as well as good fundamentally, so for me it's Lemon Tree Hotels. So we are on monthly time frame. It's a good chart pattern and it's looking good. It is on its all time highs. This crash, you can see, it was in COVID, so of course hotel business was affected in COVID. This is a really great hotel chain. You can see images of their hotels. They are really great and really well maintained. Their hotels are in Dubai and many other places, which is just great, and the quality provided by them is really good. And they were doing great before COVID impacted a bit on revenues, of course it will do, as it is a hotel business. So but now it's back to the normal and it's doing really great. You can see you already missed a rally of more than 350%. So literally from 17 rupees it is trading today at 73.5 rupees, which is just great, and it is sustaining the price, sustaining the level. That's the main thing, and the main thing which shows that it's worth it. And if we go to its fundamentals, if we see its income statement, the revenues are continuously increasing. You can see 226 to 42, 300, 400, 500 in COVID. Before COVID 680, after COVID 273 in 2022. They are almost back to normal, a great recovery of 417. But the main thing is their profits never went in negative, specifically EBITDA. So it reduced to 79, but it never went in negative, and they are now again back. They also didn't pay dividends in history, but they can pay in future, and it's looking really good. At least for me, you can take your decisions on your own. I'm not an advisory firm or anything. That's all for today. So if you found something valuable, please make sure to like this video, share this video, and subscribe to the channel for updates like this. So thank you so much for watching. Bye.